Okay, welcome everyone. Let's get right into it. Try to keep this one relatively short. There's not a whole lot to point out, but I do want to point out a couple key concepts of in the charts that I'm seeing right now. So leave me a thumbs up. You know, if you guys can do that, I do appreciate that. Let's get started. Here we go. So we're going to start out here. Let's look at the Nasdaq Futures since they'll be trading overnight here. So really the only thing that I've got on these is a breakdown and a back test. That's kind of the key pattern right now. So we've got this uptrend line right here on the hourly chart. This goes back to November, and we were kind of walking up that. We had the sell signal or a breakdown, and then we had the back test of that trend line right here. So that's still valid, still holding in place. And where are we going to go from right exactly here? I don't know. We could back test again, or we could break down. It could go either way. Objectively, this was the area where I was saying it's likely to be a good area to get short, but now we're kind of, we've broken down a little bit. So I don't know specifically where it's going to go in the next few days, but if I look at, the daily chart with this breakdown and this back test, it tells me that we're likely to go lower. I think we probably head back down to, somewhere down in this range. It shows a little better on the triple Qs. So here's the tech sector, triple Qs, and here's that pattern, bearish rising. It's really a bearish rising wedge on this pattern. We had the breakdown right here on the hourly chart and a back test. Someone asked me the other day, they made a comment if this was a back test or a kickback rally, and yeah, I mean it was. Ultimately, it was. From right up here, it's down 1.5%. Not a ton, but, it still was an objective area to short, not to go long, but to actually short. And where do we go from right here? Well, as I zoom in on the hourly, you can see we're pretty much trading. This is interesting. The last few hours, it just flattened out, and we really got nowhere. So indecisive, basically, is what that's telling me, that the market's undecided on whether it wants to go up or down. If you look at the daily, big negative divergence, really, that's in play right there. This negative divergence on the daily has really been in play for quite some time, going back to about August. So all this price action, the negative divergence showed up right about here. So all this price action here since, pretty much all of December, all of December and January, it has all been divergent high price action. So new highs in price and yet lower lows in momentum. So we have that negative divergence. The PPO is still pointed down, still bearish basically. See the histogram, how it's negative right there. So bearish PPO. We also have divergence in the PPO. There it is right there. So yeah, I think we go lower. That's what I keep saying. And when I put out these videos every single day, and I say the same thing, when you get divergent highs like this, they take a little while to play out. So, I put out a video saying, okay, we're having negative divergence. I think we're going to go lower. Well, I've been saying that since the beginning of December. So about 6 weeks, basically, is what I've been saying. But again, that's how these diverge. Where have we gone in the last 6 weeks on the triple Qs? We've, from when we put in that negative divergence right here, we've gone up about 1.5%, 2% roughly. Well, actually, from the high, we went up about 3.5%, but that's nowhere basically. So, one big red day will wipe out all these gains. So I have to continue to say it because it's still there in the chart. I can't, I'm not going to say, oh, it's time to get bullish because today was a flat day. The patterns are still there technically, and I think we're going to get the breakdown. So I'm going to continue to say that until we get a technical change in posture. Looking at the hourly, here's the recent lows that we had on that sell signal. So I'd like to, I think we come back down to those lows, about 307. And then you look for a break of those lows. The next break of those lows will probably be an area that I would add to a short position. And, from there, I think we head down to this 297 area. You can see we held this support right there. And it was resistance actually back here. So that's a good area. I think that's a pretty high probability that we get a bounce right around that area. but that's a pretty high probability target, about 16 points down. SPY, we don't have a breakdown in SPY. Here's the S&P 500. We have this uptrend line right here. We've just continued to walk up. We had a false breakdown, actually two of them, one right there and one right there. Continue to walk up. We're still in the channel, so no sell signal on the S&P 500, and that's likely why the triple Qs has not definitively broken down. So again, we need to see the breakdown in the SPY, and we get the breakdown in the SPY. Well, we should see kind of a breakdown across the board, across the markets. Until then, still hanging in that channel. But you look at the daily, and as I roll out, we basically, on the daily, we've got negative divergence right there. Just continues to extend. So lower momentum. Momentum's really just kind of flatlined right here. You can see we've just gone nowhere. And prices are just creeping higher on fumes. That's what that's saying. So, again, and then if I look at the weekly, still haven't crossed, this blue line is 2009 lows, and this is your bull market trend line. Broke the bull market in 2018. Back test here, and then we had the COVID drop, and we're still just below there. So again, no technical breakouts, no technical change in posture. I still see negative divergences across multiple time frames, at resistance, really running out of steam, and I think we go lower. From here, again, if anybody follows my channel, go back and look at how yes, I didn't get this entire rally right, obviously. I think around 295 in the SPY, which is maybe right around here, I started to get bearish again. But again, I was bearish up here. We got the big breakdown, and I was actually bullish down in this area. I started talking about going long. I did go long, down around this time frame in March. I was actually getting long because we had bullish divergence at that time. And I started getting bearish up here. And so, yeah, I've been wrong for this part. But again, I'm bearish up here. We're up near the highs, and we're at resistance. So I think it's time to be bearish and look for, the next move down. And I think the next move down could be the start of, the start of the bear market when it comes to price. Trend, we've started the bear market in terms of trend. We broke the bearish trend right here, or the bullish trend right here. This has been, to me, what looks like topping action. Takes time, though, to work itself out, especially after the longest bull market in history. IWM small caps, this is where a lot of the hot air is at, and a lot of the just speculation across the board is in the small caps. These should unwind pretty quickly when you start to see this. When the large caps sell off, the small caps should go down with them. So again, I'm not really using this to track where the markets are going to go. I'm using the tech sector and the S&P 500 to help me understand that. But these should roll over when that happens. Right now, we've got this bearish rising wedge pattern. We broke down, and we've just really been back testing. I mean, yes, I could probably extend this out. It's, we're slightly above it, but it's getting choppy, and it's just getting real messy right in here. To me, this looks like it's still just a back test. We'll probably wake up to a gap down or some sort of a big sell-off. Not necessarily tomorrow, but that's kind of what I see. I'm not trading this one right now. I'm really more interested in the triple Qs. Those big FANG stocks. Let me show you why here on Apple. So you can see Apple is starting to break. This is the trend line that I've had. I've talked about this for a couple of weeks now, basically. But here's the trend line on Apple. This is an hourly chart, but it shows on the daily as well. If I go to the daily here, you can see it. There's the trend line, and we've been walking up that trend line. Started to break. It's not impulsive, though. We haven't had that big breakdown, so we need to see some sort of a breakdown. This level here held as resistance and support right in here, so probably want to see that go too. But we're starting to break this upward trend line. We also have negative divergence right there on the daily RSI, and it's also on the PPO. You can see it right there. And the PPO, you have a bearish crossover right there. Momentum's pointed down. Negative divergence. Just in general, you have a negative setup. You just don't have that you don't have that really clean sell signal. It's just been drifting sideways. So maybe this wants to drift sideways a little more. Then maybe we get a pop up and do a back test. That's all completely possible. but any price action that you have underneath this trend line is likely a sell to rip kind of price action. So if you pop up and do a back test, that's an objective area to short. Otherwise, you look for the big breakdown, some sort of a breakdown candle that we just don't have yet. Microsoft, this thing's just been dead money. It's sideways. Again, looks like it's topping out, kind of a head and shoulders, extended head and shoulders pattern. But the point is, it's just sideways, really going back to July. So really topping out. We're waiting for some sort of an impulsive breakdown. Amazon, I've had this up here for a while. Potential head and shoulders right there. That's not been negated. You still have that head and shoulders pattern that's still there. It's still validated. So you got kind of what looks like another little shoulder right there, but complex shoulder, complex head and shoulders basically. So you look for a break of the neckline. The neckline is, I think it's right about here. Oh, I need a different tool here. Okay, there. I marked the neckline in blue. So it's about 2935 roughly. And you want to see an impulsive break of that neckline and a close, not just an intraday dip below, but you do want to see that daily close below there because this is a daily chart. So looking for that. Google looks like it's setting up in a bearish rising wedge. It's continued to make this, and we're just, kind of tightening up towards the top of the wedge. We do have negative divergence in the RSI on the daily. I'm not showing it so much on the PPO. We have it in the RSI. So again, you need that break, that impulsive sell signal or breakdown. They're likely these are all going to come at the same time. The things oftentimes just trade together. So look for that. The point about the things, you have bearish setups. Corn, this one caught me off guard. Big explosion to the upside today. And let's look here. Good volume too, actually, like relatively good volume. So that's interesting. Let's look at the week here. Yeah, nice. That's a pretty impulsive breakout. So corn continues to break higher. This is a breakout of this trend line. So, I'm looking for some sort of a pullback, maybe down to this level right here at about 1550. But, that's a breakout. So corn, it has the potential to be starting what looks to be a brand new bull market. And this is like gold. I was pointing out, going to Barrick Gold, let me talk about this real quick. This is one of my favorite mining stocks to trade. It's just, it charts well. It trades relatively well. It's got good liquidity, so good volume, where some of the other gold miners, the juniors and stuff, are pretty thinly traded. But here's the point. This was a break. This is when we got the breakout from this downward. We were in this downward trend back here in 2016. And when I started the channel in 2018, I really pointed out Barrick as a potentially really good long area. And I was talking about Barrick, buying it down at support right down here. And as you can see, that's one of the best opportunities you've had in many years. And it broke out. And this is what the breakout, I guess, looked like. Pretty impulsive, just kind of straight up. Well, that's what corn looks like. So you rip higher, you get some sort of you're going to get pullbacks along the way, but those oftentimes are buying opportunities. So that's really what I'm looking at in corn is you get the pullback, probably looking to buy or add to it, and then we continue higher. So to me, it looks like corn starting a bull market. And so maybe there's an opportunity here in coffee, Joe, because wheat, we also saw a pretty good day, but coffee didn't catch any bid, really. It was just flat today. Now coffee, if you go to the daily chart, we still have that negative divergence right there, and it's really been playing out for a correction in time, where coffee's just quit going up, but it's not really going down, it's just going sideways. Ideally, I'd like to see maybe this dip down. It could potentially get down to this 32.38. I'd be a buyer down there. Maybe we get down to below this 34.25 area. I'd likely probably buy some down there too, but looking for some sort of move to play out based on this negative divergence, or we could burn through the negative divergence. If we just rip higher from here, we'll burn through it. So keep that in mind. Coffee looks like it's starting a bull market too. A lot of these commodities, ag commodities, look like they're starting a bull market. And they look like potentially good long-term holds. The only thing that's giving me pause is the dollar. So let's go to the DXY, the dollar. And we can look at the dollar futures as well. Here's the dollar futures. Well, let me go to the DXY first. DXY here, you got this downtrend line right here. You've got there's a breakout, and it looks like we're just coming in for potentially a back test. So let's go to the hourly here. Dollar sold off today, and that's why the market didn't, that's why the market quit selling off, because the dollar was weak. And I think this market is all about the dollar. So from everything that I've seen, the market rallies when the dollar's falling, the market is going hot or falls when the dollar's rallying. This isn't based on earnings. Yeah, they'll float some headline pump news every now and then, but I think for the most part, this is all based on the dollar. And so it's important to watch the dollar. Dollar sold off today. Markets were kind of flat to muted. They might go up, they might be up tomorrow, but I think that it's likely, we also have like what looks to be like this little consolidation zone kind of right. Oh, it's right about there. We had a little bit of a consolidation zone where it held as resistance and then it broke and held as support right there. We came right back down to it. So I think this is a likely area where the dollar bounces. And again, going back to the larger pattern, well, if I roll out here, you'll see, we had a downtrend line. We broke out, and so that's a change in trend, and you come back in, you test support, and then likely going higher. So I think we're heading up to this 91, 92 area. Up in here is, I think, where the dollar's going, and it's likely the market's likely to sell off with it, because again, I think the market has been really all about the falling dollar. Looking at gold, we're still hanging in there at this support, but again, gold sold off. So, gold sold, to me, it looks like the gold traders saw that the dollar was going to start rising. And so gold already made its move, already had a decent sized sell off. And then the dollar has started to break higher. And so gold really already front run that move, but the market hasn't really done it yet. The market's starting to sell off, but it hasn't really sold off yet. So I think there's potentially opportunity there. I think the market starts to sell off. The dollar's breaking higher. Gold's already sold off. It's just these markets are still hanging in there because, it's a very speculative, hot air market. You've got a lot of retail people in here. They're not looking that deep into markets. They're not watching the dollar and they're not watching gold. They're just watching price in their own stocks. So when prices go up, they're happy. When prices go down, they watch CNBC to look for the reason why. So the miners started catching a little bit of a bid because the dollar was selling off. But again, I don't know which way we're going to break with gold, so I'm not going to comment too much on it and give my thoughts. I mean, I think gold is up longer term. In the short term, we could sell off some more. I really don't know. XLV still hanging on this trend line right here. So there's the trend line. Just we've been getting rejected every time we get up to it. It's really just been kind of this, pull back, hit the trend line, pull back, hit the trend line, kind of this slow walk up in XLV. I don't have a trade on this one right now. Looking for other opportunities. All right, XLE did do this pattern, this pop today. So we saw a 3.5% pop. And going back to this island, I have it circled. This is an island cluster reversal pattern where you gap up, trade there for a few days, and then gap down. So you create this island where there's no connect. See the gap up and the gap down. That's your island. So oftentimes when you create that island, maybe you get the downward move, but then you're going to come up and back test that island. And I look at oftentimes they'll trade into the island, which is basically where we're at right now. So we should, this blue line that I have here is about $45 on XLE. I wouldn't expect us to go too much higher than that. We can trade to the top of the island, which is around 47. We should not get a daily close above the top of the island. And that's really how I would be looking at this. So if we move up and get a daily close above the top of the island, then I think this island is negated. We just throw that out and look for different patterns. But as of right now, this to me looks like they're running it up. We're going to run some stops up in here. and then it's likely to roll over and start to head lower. And here's XOM, kind of the same pattern, but there's your island cluster right there. I have that marked out. Looks like it's just ramping straight up. I was long this thing down here, started to get long right in this area. Here's your breakout right there. Was long all through here. Caught a good 40% rip on this thing. I think this is kind of the ending move. So I'm not long this anymore. I didn't catch this, but I think we're going to pop up into this island area, potentially up to this 51, 52 area, run some stops and then reject. Or you could always stop early. No negative divergence, though. You can see we burned through it, actually. So still bullish on this. It's still bullish, this stock. We don't have negative divergence. Peloton here, still sideways, you know. So the main patterns that I really am looking at this is you have this uptrend line from the March lows. Nice, you know, this is a huge rally. Broke trend right here, but without negative divergence. It was just a break of trend. Did a full back test and put in negative divergence right there. So I got short Peloton right here. And now we're just struggling. You know, it's not really going up. It's not going down. It's just trying to figure out where it wants to go next. Usually when you realize that the downside move is the next move, it happens really fast. It comes in the form of gap downs. The market doesn't usually just, you know, give you a great opportunity to short. So the best opportunity to short so far, from my perspective, was right in here on this big, you know, gap day. That's really been the pretty good area. You know, it's been low risk. So I think we continue lower in Peloton. Yes, we could do another back test. That's completely possible as well. If we do it anytime soon, it's going to be continuation of the negative divergence. I'm likely to add to my short position on Peloton if it's going to do that. Keep an eye on Qualcomm here. Like I talked about, so I was short this one back here, added to my short right there on the 18th, added to the short again on the 9th. Then it broke down and headed right towards the support line. I covered my short position right there. And all it's really been doing is just grinding along this lower support line right here. This is your price channel, your upward price channel. We've just been grinding along. If we get the breakdown, some sort of definitive sell signal and breakdown, that's your next objective short in this thing. I don't know if we're going to get it anytime soon. I don't see it as of right now. But, you know, if we do get it, that's your sell signal. We've got a gap down here, so I think we get a reaction here at 130.22. And then we probably head lower. And we have a gap all the way down here at 90. It's about 94. I think we fill that gap. You know, if Qualcomm gets the sell signal, I think on that trend move, we're going to eventually fill this gap. Could take months, you know, who knows how long, but I am, you know, it does look promising. So sell signal, we get that, then we get a breakdown to here. It's about a 15% gain or drop, I guess, and likely to get a reaction there. So I'm going to be watching for that. It's likely to come when all the other fangs break down, if they do. Qualcomm also, you know, it has negative divergence. It's had it for quite some time now. We started putting in negative divergence right here, and all this price action up here is divergent high price action. So it's a high probability that we're going to break down, but we just need to wait for that breakdown. I'll let you guys know when I see it. Here's Zillow Group, ZG. Just this one still looks good. It just, you know, negative divergence on the daily chart. We've got, you know, we had an uptrend line right there. We broke trend. Back test 1, back test 2, kind of chopping sideways. I think we go lower, but, you know, we just need that catalyst to get this party started. You also have what looks to be like a secondary trend line, something like this, right about there. So a break of that would probably be another sell signal. And yeah, I think we go lower. NEO, again, sold off a little today after a big day yesterday. I don't see anything yet. Of course, we do have negative divergence right there. It's let me just adjust that. So it tells me we're likely to, you know, go down, but we just don't have a catalyst yet. Tesla is going to most likely be the catalyst for a lot of these EV stocks. I think Tesla's the king when it comes to EV stocks. And when this thing falls, the rest are likely to go down with it. It's a lot like Bitcoin and all the other altcoins. When Bitcoin falls, most of the other altcoins, take a beating as well. So Tesla was up today. That's the thing. Tesla was down about 7% today, but I pointed out 7% drop is nothing compared to how high this thing is up. That's not really the sell-off I'm looking for in Tesla. So I figured, they were gonna, they're gonna buy the dip. The momentum's still there. It is starting to fade. Big negative divergence extending for quite some time. But again, negative divergence isn't a reason to break or to get short. But you do have this trend line right here. We broke the trend right back here, and it's done what looks like, a back test. We haven't fully got up there, so maybe it's got one final ramp higher up to, $1,000 basically. Might get up there around $1,000, and then that might be the top in Tesla. So I talked about how I'm trading this. I am short Tesla, and, I'll probably be adding to some short positions as it continues to ramp higher. But again, I'm waiting, it's a very scaled, I'm trying to take a very scaled position. I had a starter position. I'm adding to it over time. I want to scale into this thing short because there's a lot of momentum to the upside. General Motors had a little pop today. They floated some flying vehicle news. I found it somewhere, but they talked about how they're working on a flying car or something. It's just all pump. It's all speculation. It is just what it is. And the stocks, companies do this when General Motors is trying to latch onto the EV pump. And so they're clearly talking about, EV and floating that stuff, and the market just eats it up. But we have negative divergence still remains in General Motors. Well, actually, sorry. Negative divergence is in place right now, but it's not confirmed. We didn't actually have it before, but we do now on the daily. This spike right here, you can see the spike made a new marginal high and put in negative divergence. If we sell off soon, maybe we can go a little bit higher, but if we sell, look for it to turn down relatively soon. Maybe it doesn't have to be tomorrow, but that would be confirmed negative divergence if it does. So I'll keep an eye on that. Otherwise, if we continue going higher, we're going to burn through and we won't have negative divergence. So the thing to watch on this one, here's your upward price channel. Obviously you can short at resistance, or you could short when we break that. I wouldn't be looking to get, you can get long if you're not long, but I do, typically I look to get long, down in these areas when we start to put in bullish divergences, and that's when I'm trying to get long. Usually after this kind of move and we start getting what looks to be a negative divergence, I look to start getting short. This one, another really hot bubble kind of stock, Digital Turbine. I don't even know what they do, but it doesn't even really matter. Likely it's some EV play. Here is the March lows, and straight, it's just gone, nice and clean uptrend line right there. So, no sell signals, no breakdowns, but negative divergence continues to be in play. We've got it there on the RSI, and we also have it here on the PPO. You look at the PPO, we've got a bearish crossover. Momentum's pointed down. See the histogram. So we've got negative momentum indicators. We have an upward price channel, upward price, looking for that breakdown sell signal. And it's likely to come with a fury. So when we see it, we'll jump on it. Until then, we'll just continue to look for it. Financials, here's Citigroup. Again, just chopping around this area. We're not really going much higher. We're not really going lower. We're just kind of hanging out here. So what I'm looking for is a gap down. If we can gap down, we're going to create an island cluster reversal top. So a gap below this area, it's about 62. I figure if we're going to gap down, we'll probably gap down to about 62. Maybe a little bit lower and then bounce, we could gap down to like 59 and then bounce, and then they'll rally it up to 62, but 62 should hold as resistance right in that area. So I'm looking for that. I don't know if it's going to show up, but that's what I'm anticipating. We have negative divergence right there in the RSI. We have it in the PPO. So just waiting for the catalyst. Okay, and thank you for all the subscribers that gave me stocks to look at. I am going to put out a stock a subscriber stock video here in a couple days. I'll do it this week. So again, if you have some stocks you want me to look at and you haven't posted in the comments, I go through all those comments when I'm putting that video together, and I'll cover the ones that, you know, look interesting or maybe have some sort of a trade set up. I'll cover those and I'll put that video out. I'll label that as a subscriber pick video. So put those in the comments and I will cover that. And again, you know, right now I'm really interested in short positions. I don't want to look for longs for the most part. There's a couple longs like the ag commodities that look interesting and are working pretty well. But a lot of the stock market tech names, the high flying pump names, those are all things that I'm looking for shorts. As of right now, new shorts, you know, new entries. I haven't just been short these things forever. I'm looking to enter shorts. And shorting is a waiting game, because the thing is that the stock market goes up. Typically, it goes up 8 out of every 10 days. The market's up. So you go up, you know, you're just waiting, you know, 8 days, it goes up, you know, then it comes down. It goes up 8 more days, then it comes down. That's really how it works. And that's just because there's so much interest in making the market go up. And also the dollar, you know, when the dollar loses value over long term, which is basically why the stock market goes up for the most part. And the thing is that, so when you're shorting, you have to wait. You know, the market's going to go against you over and over and over, and then it works for you. And when it works for you, you make all your money very, very quickly. And that's because everybody's loaded. You know, most people load up long, and everybody's loaded up long right now. I think there's a lot of people that are kind of max loaded long. And so when the market starts to sell off, that trade will have to unwind itself. And unwinding means that's when the short trade really works out well. You make all your money, and you know all those gains will be given back very quickly. So you just wait, and you know, wait for those days when the market starts to sell off. We wait for those sell signals that I pointed out in the charts, and when we get them, you know, you strike, and that's kind of what we're doing here. So thanks, guys. Appreciate it. Catch you on the next one.